Hey, happy Tuesday. Welcome to Talk Tuesday. If you ever been here before, welcome back. If it's your first time, Talk Tuesday is our weekly segment where we go for tips to help you enhance your finances. Today, we're going to discuss ways to raise your credit score. Hey, look at that. Comments before I even get started. Hello. Thank you for being here. I get so excited when you guys are here with me. How are you? How are you? If you were here with us last week, we discussed uh, pulling your credit report and interpreting it. So, what I want to ask, I'm going to get started, I'm going to keep rolling, but what I want you to put in the comments, did you pull your credit report since we last were live? Did you take action? Did you pull it? Let me know. I would love to hear that. But hello, welcome. All right, so if you weren't here last week with us, definitely go back and watch the replay of that live. All month we've been focusing on credit because it's Credit Awareness Month. So today we're going to continue with that topic and move on to ways to increase your credit score. You pulled it? Yay! Awesome. I love that. Hi. All right, so let's get into it. So why do we want to raise our credit score? The biggest reason, it saves us money. Why does it save us money? Lower interest rates. That's a big one. So if you were previously in my community, or I'm sure I did a live one, and we're up to I think 280 something videos. I'm sure I've done a live on interest. So definitely go back and check that out. But the interest, how much you pay on it, how much you waste on it, that's where most of your money goes to when you get a line of credit or when you get a credit card, some sort of credit. So it saves you money because a better credit score gets you a lower interest rate. Okay, another reason why you might want um, to actually get approved. We want to get approved for things that we apply for. We sometimes we can get approved, but like we just said, the interest rate. So you get approved, but you don't get that interest rate that you desire, or the interest rate that will help you financially be successful, because it's like they don't know if they really are going to get their money back, or if they don't know if you're going to be late sometimes. And actually, that's what we're going to get into next, the different parts of your credit score. So let me just go into that. But I'm still waiting in the comments to see who pulled their credit score or credit report. I'm excited about that. I hope you guys did that. I hope you took that and got that and were like, you know what, I really do need to pull mine. So if you haven't, do it this week, please. Be aware of it. It's Credit Awareness Month. Be aware of your credit. All right, so let's talk about the 5 factors of your credit score. So the biggest one, 35%, is your credit history. So that's crucial to your credit score. Are you paying your stuff on time? Are you paying it on time? Are you showing them that you can pay it on time? Are you showing them that you're good with your credit? Are you showing them that when you get this credit, when you ask for it, you apply for it, it's given to you, you're going to pay it back? You're not going to pay it back when you feel like it. Not, I've got it, so okay, yeah, I'm going to pay it back. You want it on the first, I get paid on the third, I'm going to pay it on the third. Are you respecting the credit that you receive, that you're granted? So that's number one, credit. I pulled mine last month. Does your credit go down if you pull it? No. So nope. So remember last week, if you were on last week we talked about hard pulls and soft pulls. So you pulling it yourself does not affect your credit score. So sure, you can pull it again. Absolutely. Number 2, credit utilization. That's 30% of your score. Another big one, the second biggest one. So that one is how much of your credit that you were allotted are you using. So let's say you have $20,000 of credit that you were issued. Are you here? Are you at 19,999? Are you here? Because that is not good. That is, I'm going to be afraid to give you more credit, because if I take you up to 30,000, are you going to go up to 29? Like they don't know, but then some companies, because they're winning so much from the interest, they might actually give you more because they know you're going to spend more, and then they're going to make more off of you, because that's where they make the money. They don't make money off of what they give to you, the principal of what you actually borrowed. If it's a loan, they make money off of the interest. So credit card companies, for them, a lot of them, their interest rates are so high. I challenge you to look at your bill and see how much your minimum payment is versus how much you're actually paying in interest for that same payment. And then when you look at that, think about, how long am I going to be paying this off? Think about that. Take a look at that. Number three, the length of your credit history. Are you someone who just got started? Maybe you have 1, 2 years of credit history, or are you someone who has maybe 5, 10 years, or maybe even 20 years? Having that length of credit shows that you can handle it. You're someone who, you're going to keep it. You have a card that, okay, you might not want to keep something that's, not good for you. But having a card, having a history with a financial institution, for instance, I've been with American Express since college. I feel like if I needed a different card, or I wanted a different card, or I was interested, I feel like I could contact them. Like, listen, what other cards do you have? Building that relationship with them, having it, keeping it open, keeping it active, continuing it to use it and pay it off, but having it. You know what I mean? I'm appreciating it. I'm using it. I'm paying it off. I'm not letting the bounce sit on there for a million years. But if it is sitting on there for a million years, I'm paying it every month. When? On time. Let's talk about types of credit. It's good to have different types of credit. So you want to have installments. Well, I think we talked about that the first live of the month. So if you weren't here, installments are when you get a type of debt that you're paying back. So it could be like a mortgage, student loan, an auto policy or auto loan. So you're paying it, but it has a certain amount of payments that you're going to make, and then you're done with it. That debt is completed. Versus a revolving account, which is like a credit card. So you have it, they give you 500, you spend it, you pay it back, now you have the 500 again, and you can just keep going. So that's a revolving. So having the different types is showing them that you can manage installment, you can manage revolving. So definitely you want to have mix. You don't want to have all of the same kind. You don't want to have all of the credit cards and you've never had an installment loan. So they don't know if you can handle that, if they can trust you with that, or what to do with that. So definitely you want to show mixture so you can show that you can do both. And the last part of your credit score comes from 10%, which is new credit inquiries. How often are you applying for stuff? Are you applying for stuff every month, once a year, every 6 months, every 2 years? That is something that shows up on your credit report, but we talked about that last week also. So those are the parts that impact it. So let's get into the strategies for increasing it. So I'm going to go over 7 different strategies today. So if you have your pen, take it out. If you don't have a pen, then definitely what you can do is watch the replay. This is going to stay on YouTube, so check out the replay. So number one, let's get right into it. Number one, just like it kind of mirrors your credit. What makes up your credit report? Paying your stuff on time, paying your bills on time. That is a big way to increase your credit because that's the biggest part of your credit score. So paying your stuff on time. If you haven't been paying it on time, begin that. If you are, keep it up. Because if you have a good credit score and then you begin to fall off, then that's going to be a big and quick drop for you. So it goes down faster than it'll come up. So you want to make sure you're paying stuff on time. Number 2, lower your utilization. So if you have a $500 credit limit, or for sake of numbers, let me say 10,000, so it'll be easier to understand. So if you have $10,000 on a credit card, you want to keep it under 30%, ideally, right? So then you want to keep it under 3,000 that you owe them. But to be really good, keep it under 10%. That's what you really would like to do. That's where you'll get the best out of it. And then if you can, 0. But sometimes we need our cards and sometimes we can't pay it off in full, but you want to keep it, the lower you can, the better. But 30% is where there's a bigger effect on your score. So definitely keep it under 30%. If you really, really are good at it and you really can, under 10%, and eventually get to the paid off. Another thing that's really good is requesting an increase of your limit. A lot of people do not request it. A lot of people need it sometimes, and they don't even request it. But requesting it, because remember, utilization is a big part of your credit score. So if you have $500 and you've used $495, getting an increase and it takes you up to 700, 800, you're now showing, or it appears that you haven't used all of your credit. So you're showing that you didn't use every penny that was given to you. So having that increase in your credit score is going to be, I mean, in your credit limit is going to help your score out. Now, don't get the increase and then, like we talked about earlier, then shoot it up, shoot it up high and use it, right as soon as you get it. And a lot of times we fall into that trap because sometimes when they give you that, then they'll give you like a little bonus or reward. For the first couple of months, you have 0% interest rate. But then you have to look at the very small writing and see how much is it going to go up to after that introductory period. And something that a lot of people don't realize, or maybe they realize it and don't care, but let's say your introductory rate is 0% and then it goes up to 30%. Well, if you've got all this stuff and then once your period ends, you're going to get that 30% for everything that's on that card. Everything, not the stuff from when that starts, when it goes up to the high interest rate. No, 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 no. They're going to hit you with a big, big interest payment or interest on your bill. And that's really hard. I find that when maybe you go get furniture for your house, a lot of times those places will give you store cards, and they'll say you have 5 years to pay this off. But if you're not mindful, if you don't check, if you don't really look at it and do the math, what you can fall into is, let's say it's maybe $2,000, and then they say you have to pay it off. Let's say $5,000. Let's make it easier. Let's say you have $5,000 and you have to pay it off in 5 years for you to not get any of the interest. What you have to be careful of and be mindful of is with that type of agreement, you have to pay $1,000 every year. But they will set your minimum at a smaller amount where you won't pay it off in time. If you're not paying attention to that, if you're not realizing what's happening, then you can do so good. And I'm paying on time. I'm doing it and I'm watching it go down and everything like that. But it could be set up so that you actually fall into the trap of, now when I get to the 5 years, right at the end, I'm hit with the interest. Which, what does that do? That traps me, that keeps me owing them, that now makes me owe them more money. So be mindful of that. If you do things like that, that you see if it's like, then that's an installment loan. So when something like that, just make sure that you're seeing how much that you're going to be paying actually equals up to the amount that time that's going to be paid off before the interest hits. If you notice that it's not set up for you to, win and actually get to that, pay a little extra. Allow yourself to save that so you actually are benefiting from the no interest, because that's what it's about. That's how they pull you in on that benefit. So what you have to do for yourself is make sure you actually receive that benefit. Another way to increase your credit score. I talked a long time about that, huh? I got on a roll with that, huh? Let's see. Pay off small debts first. So this is really good. Sometimes we're working on paying our different debts off, and we think like, well, this one's like is like really on my back because this one's so big. So you're like, I want to pay that one, I want to pay that one, and you're working on that one, and that one could be harder because you're paying on it, and because it's so large, it takes you longer to get to it. So then you get to the, like, I'm paying it, but geez, I'm still paying it. And sometimes you can kind of get discouraged and lose your motivation of paying it off because I've been paying it for 5 years and I'm still paying for it. So start something smaller. Start with your smaller one. Maybe you only have something for $100 or $200 or even $300, where you pay it for a couple of months and then that one comes off, and then you're like, okay, all right, I pay something off, and then you get that quick win, and also it's improving your credit. Something paid off, something down to 0. So that's good. You have to be careful to get the new transfer and credit card, and now you are paying 2 credit cards instead of, oh, yes. That's a good one. And that's a mistake that a lot of people make with their credit cards. That was a good one. So I'm going to go into that. I wasn't planning on talking about that, but that was very good, and that could be very helpful for you. So you'll have a credit card. They will offer you an introductory or a bonus for the year. I have one credit card who offers it every single year. When you get this, they'll offer you to transfer all of your debt from your other credit cards to their card for 0% for what? A certain amount of time. So, what people will do, throw it all over here to pay it off quicker because there's no interest for a period of time. And before the time even runs out, they've now run up all the original cards over again. So now you have double the debt. So you have to be careful with that. That is it's it could be a very good situation for you. It could really help you get out of that. But if you don't do it properly and now you've thrown everything on this side to the card that has 0%, and then you go over here and you're using this. And you can fall into that because it could be like, well, I'm just gonna go get something to eat, or I'm just gonna go get some gas. That's only $50, only $60. Next thing you know, you're up to $500 on that card now. So you have to be careful with that. That was a good thing in the comments. Thank you for that. But that is, it's risky. So just you have to be strong if you are going to roll it over to pay something off, and benefit from the credit balance transfer with the other, credit company. Put the other cards up or give it to someone. I don't want to say cut it up because what if you need it in the case of an emergency? So, but yeah, start with smaller. That's where I was at. Start with smaller debts and just pay them off and get to your wins and see them falling off, so you can feel good about it. And then make sure whatever you use or whatever you pay off for this thing, move it to the next one. Snowball effect. Do that. That's my favorite. Pay it off faster. Um, and then I have the next one is become authorized user on someone's account. Of course, you need to have someone who actually has good credit or someone who is actually doing good with the credit card they're putting you on. So, first, my one card I've had now maybe like 23, 24 years, right? But your parent might have had their card longer than me. Maybe they had it 30, maybe they had it 40 years. But instantly, as soon as you get on there, then it's showing that you've had credit for this long period of time. But also, what you want to make sure is that they're paying it on time, because just like you can inherit their good credit history of the paying on time, of the interest, or the like the utilization. So if they have that card and it's maybe $10,000 limit and they're not using it, so that's going to look good on your credit. But you don't got to be careful because on the good, it could be the bad. If they're not paying it on time, I was like, sure, you can be an authorized user on my account, and you have no idea they're not even paying it on time, or they're paying it one day late every month, or you know. So just be mindful if you do become an authorized user on someone's account, then make sure that they are really handling business with their credit. You should be a benefit for you. Definitely should be a benefit for you. And I know a couple of years back, people were actually selling that. Like, if they had credit and like really good credit and had a lot of cards, they were like, oh, here goes, I'm going to charge you such and such amount for you to add you on my account so I can help you. And they were like going crazy with it. And then they kind of stopped it. Some credit card companies were not allowing it to be unless it was like a family member or stuff like that. It really blew up. I'm not sure if you guys know anything about that, but that was a couple of years ago. It was a little crazy, but it was helping people. But then credit card companies were like, hold up now. They were on to them. But that's really something that could benefit you if you have someone who is doing good with their credit cards. Another way to increase or raise your credit score is disputing errors on your report, pulling off the bad things that are on your report that are not true or not you or not accurate, or you know they're going to fix your or going to increase your score. So if they're showing that you were late 90 days and you weren't, well, guess what? When you take that off, it looks better because now you're showing that you are paying on time. Or if they say that you've used this much and you haven't, and bringing it down will definitely help you. And that's another thing. Another way too to catch it is, what if someone had actually accessed your card or stole your card? You wouldn't even know. You know what I mean? That it was on your credit report. So that's why we have to look at things. Or what if somebody actually opened an account? Matter of fact, we're going to talk about that next week. I'm not even going to get into that. That's next week's topic: fraud and identity theft and how it affects your credit. So I'm going to stop that right there. And then my last one, number 7, ways to raise your credit report, credit score. And what I want you guys to let me know in the comments too, if you're watching, or even if you're watching on the replay, Which one of these will you be starting with? I want you to really, take this in and take action. Just like when I came on, I asked you all, did you run your credit report? Did you pull it so you can look at it? I don't tell you this. I don't come on here and go live for you to just listen to me. I want you to truly enhance your finances. Like, that's what I want. So that's why I come on here every month. There's a different topic. Every week there's a different topic, or every month it's a different focus, but every week it's a different topic because I want you to enhance your finances. So listen to me. Coming number one is big, and watching is like, okay, I want to learn. I'm going to learn, but also you have to put action behind it and actually do things. So if you haven't pulled your report from last week that we talked about, pull that. And then I want you to let me know which one of these strategies you will be using first to increase your credit. So the last one I have on here, and there are other ways, but these are just the 7 that I wrote down, is avoiding too many new accounts. So we talked about that a little bit last week. And, on your credit report, you wanted to show two inquiries over a 2-year period. So you don't want to have so many and it's looking like you're just trying here. Well, is this person going to let me? Is this person going to let me? And this makes you look a little desperate, and makes you look like, dang, they must be, in a bad situation that they have to keep applying for stuff because they must not be getting what they're trying to get, which would then make it seem like, you're not qualified because you keep going for it. So that's 10% of your credit score. So try to keep your inquiries or a 2-year period under 2. And remember that you do fall off because it's a rolling. So today is the 25th. So, March of, let's say, March 2025. So anything that you run from March 2023 to now is on there. And the next month on is April 2025. Then March of 2023 will fall off, and it'll just keep moving forward. But let me know in the comments. I'm still waiting. No one put it in the comments yet. What are we going to be starting with? What are we going to, and some of these things you might already be doing, so you don't have to start there. You know what I mean? So some of these things you might have heard already, but it's important to not only hear them, but to do them, like I said earlier. So definitely let me know what you will be starting with to raise your credit score. This is important. This is very important because it helps you financially. It's helping you. It's saving you money. It's giving you the stability of, like, if something did happen and I needed help financially, I know that my credit score is going to allow me to walk into an institution to get approved. Right now with the economy, things are happening, things are shutting down, people are losing jobs. But what if something happened, emergency, like, oh my gosh, I need $1,000. Can you go to the bank and get approved? Do you know I'm going to walk in and I'm approved? If not, then you definitely should, be taking steps to increase. And what I'm going to quick do now is tell you the different scores. So, and I did pull that up earlier, so I had it, but I almost forgot. So I'm glad I kept talking. So the credit score is from 300 to 850. If your score is between 300 and 579 points, you have poor credit. If your score is from 580 to 669 points, you have fair credit. If your score is 670 through 739, you have good credit. If your score is 740 to 799, you have very good credit. And if your score is 800 through 850, you have excellent credit. Now, Coach D is striving for the excellent. I'm trying to get to the 800. But, what I want you to do is not focus on getting to the 800, though, but focus on getting to your next level. Wherever you are, focus on getting to the next one. Focus on getting higher and work one step at a time. Sometimes we look too far ahead and then it's discouraging because, I'm never going to get there. Take steps. So that's what it's about. Keep moving. Pulling my credit report more often. Yes, definitely. I want you to pull your credit report more often, but what are you going to do to raise your credit score? Are you going to be the person that one of them was pay your bills every time on time, or lower your utilization, request an increase, pay off small debts, become an authorized user, dispute errors, or avoid opening too many accounts? So I don't want to, hold you guys any longer, but definitely let me know in the comments. I really, really want you guys to take action. Which one will you be starting with? What you'll be using to increase your credit? All right, I'm not going to hold you. Requested increase. Hey, somebody answered. Thank you. I was trying to hang on until somebody answered. I want to hold you guys accountable. So, yes. So, all right. I'm looking forward to you letting me know that you requested it. All right. So, thank you all for being here. I appreciate you. Come in to join me for Talk Tuesday every week at 6 p.m. here on YouTube. Next week, like I said, we'll talk about how identity theft and what was it? Identity theft and something else. I said it earlier, but I can't think of it right now. But how they affect your credit score, because again, everything is all credit this month. And next month is what? Financial literacy month. So we're going to talk about a broad range of things next month. I'm excited about that. Financial literacy month. And I'm going to have a summit next month. I haven't picked the days yet. Stay tuned for that. I'll tell you more about that next month. But I'll see you all. Let me say, stop shopping and don't open any new accounts. All right. Okay. This is second person. All right. Well, thank you. Have a great evening. And it's coming close to the end of the month. So check your financial goals for this month and begin to set your financial goals for next month. And I'll see you all next week. And let me know in the comments where you'll be starting. See you later.